So this is today topic is foreign currency revaluation. So first, what is meant by foreign currency and what is meant by foreign currency document posting? What is meant by foreign currency revaluation? First, we know the difference between three, then we can start the process. First of all, foreign currency means other than any country currency we call it as a foreign currency simply. So, for example, our country currency is INR. So US currency, USD, sometimes different kind of currencies, UK currency, GBP. It's like this is called as a currency, like a foreign currency. And foreign currency posting. So posting means at the time of document posting in our system, like even document or vendor invoice posting or vendor payment or customer invoice, customer receipt or customer payment, whatever the document posting. At the time of document posting, we can select, we can choose currency like other than INR, we can choose another country currency that so then we can post the document that is called as a foreign currency document posting. Next, foreign currency revaluation. So, the foreign currency revaluation means, for example, as our part of business, we will purchase some goods and services from foreign vendors. So, in this scenario, at the time of purchase, dollar price is 80 rupees or 85 something. So, for example, we can purchase invoice value is 1,000 rupees, and purchase date dollar price is 85. So when we post the document in USD currency, so automatically we can view that document in our company code currency like INR currency. It will display 80,000 or 85,000 something. So that is at the time of purchase time, dollar price is 85. So again, later, like 1 month or 45 days, whatever due date completed, again we are going to make a payment to the vendor, like a foreign vendor. That time dollar price is 90 rupees. So for example, dollar price is 90 rupees. Then we need to pay 90,000 as per dollar price. So in this scenarios, in this situation, we need to pay 5,000 rupees more to our vendor. So this is foreign currency revaluation. So hello. So please mute yourself. Uh, so for at the time of vendor relevant payment, the payment time dollar price is 90 rupees. Invoice purchase time is 85. So then we need to pay 5 rupees extra more, 5 rupees. It means 5,000 rupees or $5 extra. Then overall invoice means we need to pay 5,000 rupees extra amount to the vendor, foreign vendor. So at the same time, whenever we're going to make a payment after due date completed, the dollar price is decreased like 85 to 80, then we'll pay 80,000 rupees only. Then we'll get 5,000 rupees or loss. So we need to identify these foreign currency related fluctuations. So how much amount we'll gain, how much amount we'll lose in the form of foreign currency fluctuation. We need to enter in SAP ERP system. This is called as a foreign currency revaluation. So this foreign currency revaluation may be two types like open item revaluation and GL open item revaluation and GL related revaluation. So this is the overview. So then let's step by step. Step by step, I am going to explain. So still, is there any doubt regarding that overview? So anybody who are not understand immediately you can ask me. I'll explain once again.
Can you give an example as well, if possible?
So for example, we can choose vendor payment, like everything I'll mention it. So vendor payment. So at the time of vendor invoice, like when we receive the goods and services from vendor, for example, this month first date, we are receiving the goods from foreign vendor. So this is the invoice date and document number. So $1,000 will purchase from the $1,000 is the invoice value. So at the time of purchase, dollar value is 80 rupees. So then total invoice value is 80,000. So this is at the time of purchase time, invoice value and dollar value compared to Indian rupees. So this is $1,000 we purchase. So again later we are going to make a payment by this month ending. So month ending, like a payment document number, something I mentioned it. So we are going to make $1,000. So at the time of payment, like month ending, the dollar price is dollar value is 85 rupees. So one USD equal to 85. Previously, one USD equal to 80 rupees. So then we need to make 85,000 rupees. Once again. So then we need to make 5,000 rupees. So 85,000 rupees. So original value is 80,000, but at the time of payment 85. So then we'll get a 5,000 rupees of loss. This is comes under the exchange loss. So at the same time, so I just tell example for 85 rupees. So same day, whenever we're going to make a payment, once again here I just mentioned 31st. So same day dollar price is, for example, it will decrease 80 rupees. Then 80,000 it will decrease 75. So then original value is 80 rupees. We need to pay 80,000. So dollar value is decreased. So 75. So we need to pay 75,000 rupees our vendor. So then we'll get 5,000 rupees of benefit from the particular invoice. So this is called as a exchange gain. So with the help of all the configuration, we by month in this is FC revaluation is the one of the month ending activities. It is done by the end user. So before that, we need to do the predefined configuration. Based on that, once end user will enter, then automatically with the help of some T codes, like with the help of these T codes, FAGL underscore FC underscore VL. Once end user will run the FC revaluation, so system will display how much value will get the how much amount will get the income and how much amount will get the loss in the form of exchange loss or gain. So everything. So mostly these exchange foreign currency revaluation, it will be calculated in the point of view when types of foreign currency revaluation. So how many types we are calculated the foreign currency revaluation? So there are two types of foreign currency revaluation. One is account balance revaluation and open item revaluation. So account balance revaluation refers loan accounts. So for example, as a part of our business purpose, we will take some loans from foreign bank accounts. So in this case, this is comes under the open item revaluation. Sorry, in this case, so in this case, it is comes under the account balance revaluation. For example, we are taking a loan from foreign banks like Standard Chartered accounts and other bank accounts. We are taking the loan from US banks. So then we need to create the particular bank GL account. So whenever we are taking the loan from foreign bank, the entry is we are received or cash. We are received loan from particular bank. So our bank account, our company related bank account or cash account debit. So which bank we are from which bank we are going to take loan, that bank account like foreign bank account we need to in credit to. So later each and everything how entries will going to post everything I'll explain. So one is account balance. So simply account balance means we are taking the loans from foreign bank accounts. So for example, we are taking $1 lakh from foreign bank. So every month, with interest, we need to pay every month 5,000 or $10,000. So for example, so at the time of loan taken, dollar value is 80 rupees, and monthly we are going to make a repayment time. Repayment time, month ending or any date, something month first or month ending, that is the due date, EMI date. At the time of EMI pay date, dollar value is if it is increased like 85, then we need to pay more 5,000 rupees based on the EMI percentage. We need to pay some extra amount. At the same time, value is dollar price it will be decreased. Then whatever the payment we are making in the form of EMI, that EMI amount will be reduced. So that is one is account balance revaluation, and another one is open item management. So open item means like vendors and customers also we treated as a open items because these are all under the sub ledgers. So if you purchase any goods and services or if you sell any goods and services to the vendor or customer, then automatically it will reflected as a open item balances when you are making a payment, like when you are make a payment or when you are receive the payment, till that balance will shows as a open item management. So as per open item management also we need to evaluate the you need to find the foreign currency revaluation because as per management requirement or manager requirement client is asking, so by this month ending, so this by month ending how much amount I will lost in the form of exchange loss, how much amount I will gain in the form of exchange loss, exchange for exchange amount. So these kind of the all the information will these kind of the all information we will ready to provide in the form of foreign currency revaluation, the help of foreign currency revaluation. So then so this is open item and this is account balance. So then unrealized gain, and so why I'm telling this all the configuration, most of the people just taking the configuration step by step and finish that, but you need to by heart the steps. So without overview of the steps, and nobody cannot understand easily. Once you understand each and every step, so what is like foreign currency, realized gain, unrealized gain, export, imports, foreign terms, each and everything you need to know the you need to learn the basic information. Then automatically based on that, where why we are doing the each and every configuration, you can easily understand. So that I'm explaining some basic information. So unrealized loss or gain. So unrealized loss or gain means so whatever I'm telling this exchange foreign currency revaluation. So this is also month-ending activities. How we are going to do month-ending activities like GRIR clearing account, accrual deferral concepts. So there are the depreciation. There are there are a number of month-ending activities. At the same time, foreign currency revaluation also one of the month-ending activities. So by month ending, we are going we need we as per client requirement, we need to generate the report how much amount will get in the form of foreign exchange, how much loss will get in the form of foreign exchange, foreign currency. So these kind of the information will generate by month ending, and again next month first will reverse it that. So this is only reporting purpose will generate the foreign currency revaluation. uh, as per reporting purpose, by month ending, we are generating the foreign currency revaluation. So this is unrealized gain or loss. So for example, uh, this month first, same thing. This month first, I posted one invoices. I sell the goods and services to the one customer. At the time of selling, dollar value is 80. So then a total amount 80,000 we need to collect from the vendor. Sorry, we need to collect from the customer. So by month ending, we are going to generate the report. So like we are going to make the foreign currency revaluation. So this is not a original payment. So this is foreign currency revaluation. So it means we are selling the goods 80,000 to our customer by this month. So by this month ending, how much amount we are receiving from the particular customer? Only this is estimation amount. In the estimation time, maybe dollar value it will be increase or the dollar value it will be decreased. Whatever the scenario is, how much amount will receive from our customer by month ending. So these kind of the report generation, this kind of the report will generate and forward to the management or client. So that purpose will generate it. And here 31st is the we are going to generate the foreign currency revaluation. So the 31st customer dollar value is 85.78. So by then we will get exchange loss. So once again exchange loss. So dollar price is 78, then you will get the exchange loss. Next slide. 85. So 31st month any dollar price is 85, then you will get total amount is we are selling to our customer 40,000, but month ending estimation is 85 rupees dollar value, total 42,500. So it means 2,500 rupees will expect a profit from this foreign currency revaluation from our customer side. So at the same time, dollar price is 75, then we'll receive 37,500 rupees only from our customer. So then automatically we'll get 2,500 rupees loss. So these kind of all the information will just run only single with the help of only this FAGL underscore FCVAL T code. Once all the configuration done, end user point of view, he will use end user will use this T code and he will fill some basic parameter. Then automatically he will update entire. If company having 1,000 invoices, 1,000 customer invoices, 1,000 vendor invoices, 1,000 GL related documents, or else 10 bank account he's taking the loans, whatever, each and every account balance revaluation and open item revaluation, all the scenarios, just one click, he will generate the report, how much amount will get exchange loss, how much amount will get exchange gain. So this kind of all the information will generate with the help of foreign currency revaluation. So this is realized gain. So realized gain means we are not make a payment, we are not getting the payment. Only reporting purpose by month ending, we are generating the reports. So this is the realized gain. And sorry, this is the unrealized gain. So realized gain means so actual payment happened. So it means vendor point of view, we paid 80,000. We need to pay 80,000. So by month ending or next month 15th or some dates, we paid 85,000. So then automatically, whenever make a payment, it is done. That is called as a realized gain. Payment is not done. That is called as an unrealized gain. You just understand this both. Unrealized gain or loss means we are not making. We are not make a payment. We are not received any kind of payment from our customer or vendor. It is just a reporting purpose. We are running the FC revaluation, and again next month first target we will return the transactions. Realized gain or loss means actual payment. When actual payment happen, then we can identify the help of realized gain or loss option. We will generate the report. So particular time, particular duration, how much amount will gain or loss. These kind of the reports. Then coming to export some imports. So these are all the you are aware this one. Export refers the goods and services sold to the foreign customers, while imports are while import means goods and services received from the foreign vendors. So this is export and imports terminology. So FC term loan. So I already explained here. Account balance is nothing but term loan. So we are taking the loan from foreign vendors. We are taking the loan from foreign banks. That is called as a FC term loan. So if you take a loan, any loans from foreign banks, so till I hope everybody is understand, right? Without any doubts. This concept.
Yeah, it's clear.
Okay. Then coming to the configuration point of view. So before that, I'll explain a few more explanation and exchange rate types. So what is meaning of exchange rate type? So exchange rate type means there are three kind of types like GBM. These are all the standard exchange rate types SAP provided. If you want to change as per our client requirement, instead of D, we can change as per our new names. As per our company requirement, we'll set as a new name. But G means bank buying rate. And G means bank buying rate, P means bank selling rate, M means average rate. For example, bank buying rate. So bank buying rate means so always compared to bank selling rate compared to bank selling rate, bank buying rate is low. And I'm going to bank selling rates are higher to bank buying rate because banks always collected charges from the customers, whatever. So here, dollar price is today 85. I'm just mentioning. So bank buying rate. So bank buying rate means we have a dollars. We have a $1,000, right? So when, for example, we are in India, we have a USD dollars, but these USD dollars, with the help of USD dollars, we cannot purchase anything from your local country. So compulsory, you need to exchange that money. You need to exchange that money to USD to India, USD currency to INR. So then we have an option. We will go and hand over that USD dollars to banks or any other exchange department, exchange offices. Then they will give money to the based on dollar value, and they will collect some charges. So at the same time, here also bank buying rate means, so you have $1,000. Dollar price is 85. Then total is 85,000. So as per your intention, banker will pay 85,000 to you, but banker will pay less than 85,000. He maybe take something 82,000 or 83,000, because they need to collect charges. They need to take the charges from our side. So banker is not a free, is a service sector, but it is not a free service sector. So each and every banker will do each and every transaction. Bank will must and should collect some charges. If bank will buy the foreign currency or bank will sell the foreign currency, whatever the transaction, compulsory bank will take some charges. So, for example, here bank buying rate. So bank buying rate 82. At the same time, so for example, we need foreign currency. We need USD. So I will pay 80,000 to the bank. So in our intention, so banker will give $1,000, but banker will not give $1,000. So he will return, if you deposited 85,000 rupees INR, banker will not return to you $1,000. He will pay something like 970 or $950 only, because these yeah, these currency conversion also banker will take some charges. So here banker will take like $50 or $20 or $10, whatever. I just mentioned 970, because so you are going to ask, just now I deposited in $1,000, I take 82,000 already. So again, I will pay 85,000. I need $1,000. So banker will not accept and to pay you $1,000, because if you once transaction is done, again within fraction of seconds, again you need to ask your money. Banker will not ready to pay full of $1,000 money, because each and every transaction banker they will collect some charges. So this is the scenario. So G means bank buying rate, P means bank selling rate, M is average rate. So some of the scenarios we are using this average rate. I just explain this one also later. So here I already explained bank buying rate. USD is $1,000. So we have $1,000. Exchange rate is 85. Amount 85. Bank selling rate 90. So always bank selling rate, it will be more than bank purchasing rate, purchase rate, bank buying rate. So this is the just explanation. The bank buying rate refers to amount of Indian currency bank provides when enhancing the foreign currency. And B means bank selling rate refers to amount foreign currency when the bank will provide exchange rate in Indian rupees. M means based on the requirement, choose average rate. So this is the process, and I just explain some of the entries. So once you understand, based on this transaction, system will do the entries. So, but these are all the entries system will learn automatically. But before that, we need to create some of the required GL accounts. So how entries will going on? So loan taken from bank. For example, once you take a loan from bank, then I already explained cash or bank account data to foreign currency bank account, foreign bank account. At the same time, foreign currency revaluation entry. So foreign currency revaluation entry account balance. So account balance means just we taking the loan, or based on the loan account, we will calculate the revaluation. So for example, foreign currency exchange loss. So loss, whenever getting the loss, it means dollar whenever loss means whenever you're paying the foreign currency term loan EMI, so that due date time dollar value it will be increased, then you will automatically get the loss. Then at the time of payment, EMI payment, dollar value it will be decreased. Then automatically will get the gain. So based on that, entries it will be reflected. For example, if it is exchange loss account debit and loan account credit. At the same time, if it is exchange gain, loan account debit and exchange gain account credit. So this is the term loan relevant entry. And coming to the so at the same time, unrealized entry. So unrealized entry, it is comes under the open. These entries comes under the account balances, and these entries comes under the open item balances like customer, vendor, and any other GL accounts. So here I am explaining unrealized entry. So I already told unrealized entry means it is we are going to post that entries for only reporting purpose only, not for actual payment. So for example, if you will get a loss from the unrealized entry, then exchange loss account debit, balance sheet adjustment account credit. So these are all the GL accounts. It will be these are all the GL accounts required. So later we'll going to create these GL accounts. So if you will get a loss, exchange loss account debit, balance sheet adjustment account, it will come under the credit. Then if you will get a gain, balance sheet adjustment account debit and exchange loss account credit. So once you will get a so this is the entry unrealized. Unrealized entry means exchange loss account debit, original reconciliation account. So original reconciliation account means so already if vendor point of view we are using the vendor reconciliation account, that reconciliation account also we need to assign the relevant configurations. So this is the entries. Once you understand the entry, once you understand this procedure, based on this only entries it will be generated. So once you done all the configurations, entry also we can identify easily. So this is the up to here. This is the basic theory information. Then coming to the configuration point of view. So we need to create exchange rate types. So I already explained bank buying rate, bank selling rate, average rate. So then we need to create these three exchange rate types. So this is the path. So we are going with the help of path. So I'm explaining in ECC server only because S/4HANA servers are middle of the time due to some network issues, it is not working. Once again.
So conceptually, there is no difference between ECC and S4 HANA, no?
Hello.
Hello, am I audible?
No, there is no any changes. So maybe
Yes.
some reporting point of view, everything it will be fine. It will be same. 99% of configuration, everything it will be same compared to ECC and S/4HANA.
I think T code has changed from S4 to ECC. ECC to
Yeah,
S4.
revaluation T code is different, I believe.
Yes, end user point of view that one. Right? Hello.
Yeah,
Ah,
FAGL
yes.
underscore FC underscore val, no?
Once again.
Yes, what you have said is for ECC, and for S4 it
Okay.
has changed.
This is FAGL underscore FC underscore VL. It is ECC.
Yes.
Okay.
And FAGL FCV is for S4 HANA.
Okay. So I didn't run that in S/4HANA. Okay, once again tell me that one.
FAGL
FAGL,
underscore
FCV.
underscore FCV.
FAGL underscore
FCV.
FCV. That's it.
Yeah.
Okay, thank you. So then exchange rate type. So whatever we discussed, these three type of exchange rates like bank buying, selling, average rate, these three we need to create in our ERP. So already GBM standard standard is there once again. /n SPRO. SPRO SAP NetWeaver general settings. General settings. Currencies. Check exchange rate types. So this is the path. I already mentioned path in this box. So based on this path, so this is there are some standard exchange rates available in the system like currency transaction ratio. Once again, enter exchange rates. Okay. There are some standard exchange rate system. It will be provided like GMP, like I already created in this system. So GBM, these are the some standard exchange rate system. It will be updated. If you want to change instead of GBM, we need to create like whatever requirement we need to create REP1, RED2, RED3. This is I think I created in server. So everything I created, but I'm going to explain step by step. So in this way I'm created. So go to the position. Once again.
Yeah, can you put some light on that direct quotation, indirect quotation that we maintain, no, in exchange
Yes.
rate? It will be
Okay.
helpful.
Okay. Okay. So exchange rate. So first we need to create these three types of like exchange rate by bank buying rate, bank selling rate, and average rate. These three we need if you want to create new one, or else there is some standard GBM. Then we need to create the ratios, translation ratio. So what is meant by translation ratio? Translation ratio means, for example, we will enter 1:1. 1:1 means 1 USD equal to how many INRs? For example, 1 US dollar equal to 85 rupees INR. So this is based on this one translation ratio. System will automatically calculate it. So 1 USD equal to 85 INR. So this is the okay. Based on translation ratio, system will calculate it. Then exchange rate type, the third one. So with the help of OB08 code, we'll fix the exchange rates. Enter exchange rate here. T code also is same screen. So this is the enter exchange rate screen. So before that, we already created like the exchange rate types and translation ratio also we created. Then here we need to update the exchange rates. So exchange rates, it will be updated by the end user point of view. So some of the core end users, they will update it daily. Like daily how much US dollar it will be, like today is 85 and tomorrow is 86, and GBP UK dollar today is 107, tomorrow is 108, and AUD and 54. So this kind of the if part of client businesses, client having how many countries, client having the company codes, or client having how many countries business partners, then based on that core end user, they need to be updated daily. Foreign currency where foreign currency changes, or the end user need to be updated daily. So then here at the same time we are going to update today date OB08. So I'm going to create a
So at
new
the time
entry.
of
Yes, please.
invoice posting, system will pick the rate from translation ratio or OB08.
So at the time of based on that OB08 system, it will pay. If you want to override that, override this master data based on that invoice only, you need to pay. You need to update. For example, today date is 80 rupees dollar price. So whenever post at the time of document posting under invoices, you select the USD. System will take automatically today exchange rate only. But if you want to override the today date, you have option at the time of document posting in single screen. There is an option amount also. We have option to enter the document date. For example, 10 documents we have. So 9 for based on the exchange rate, 1 is for based on the invoices. Then we have an option the time of document posting. We have an option that override the transaction, right?
As in, we can override the rate, whatever it is coming in invoice, no? We can edit it, no?
Right. That's what I'm telling.
But usually in a real-time scenario, this exchange rate maintained OB08, it's maintained monthly on a monthly basis, right? From the third-party system to the SAP, right?
Party system they will
It doesn't
upload, but
maintain
it's
on a
not.
daily
It is
basis.
not monthly. It is daily basis. So some of the companies they fix it as a weekly.
Correct,
Mostly,
correct. See, yeah,
Actually, it depends,
rate
no?
will fluctuate daily basis, but yeah.
okay. So I already updated is to updated exchange rate today. So I'm just example purpose. I'm going to create one more time. So GBP. So like sorry GBM. So G means G means bank buying, and B means bank selling, and M means standard price, right? Okay, then valued from. So this is the end user point of screen. With the help of OBTG rate, end user daily updated this foreign currency fluctuations if any changes happen. So daily, day by day, if you want to update it, end user must update it here value from date. For example, yesterday, like yesterday, 07/12/2024, dollar price is 85. Then again today, dollar price is updated. Then he needs to update date also here, like these three buying, selling, and average rate. So today, today date I mentioned 08/12/2024. So maybe system it will not taken already updated. If not taken, we'll update in tomorrow date or something. From USD, for example, from which currency to like USD to INR. Like for example, we have a transaction, we have a business partner transaction with USD customer or vendor. Then here we need to update USD. For example, as part of our business, we have a different kind of like USD, UK, China, Japan. So then each and every country currencies is we need to update it with these three types of buying, selling, average rate. So here I am updating USD. So direct quotation today date is 85. And at the same time, bank selling rate also USD. So bank selling rate. So mostly bank selling rate it will be low compared to bank buying rate. Then here INR, INR. Sorry. Sorry.
Sorry, I missed it. What is the difference between indirect quotation and direct quotation?
Hello.
Sorry, I
So-
missed it here. What is the difference? Indirect and direct?
So direct quotation means some of the business partners, some of the like banker side, they will fix a direct amount. So indirect quotation means they may be third parties, they will update the changes. So direct quotation means it is fixed from authorized banks. Indirect quotation means some of the middle some of the third parties, they will maintain in the amount.
Got it.
So again, 08/12/2024.
But in a real-time scenario, most of the companies select only M only, right? Standard rate.
Yes, they are selecting
Yeah.
direct quotation. So this one, average rate I'll mention is 82. So this is as per USD currency, I mentioned it. So if you want to update, like already exists with the same key, it means today I already updated. So this is the procedure we are going to update the foreign currency exchange rates. So you want to create, just close it. Like already we created, I already created exchange rate type G. Just check it. USD, INR, valid from enter. So you can see today I already previous when I practice once recap that one, I already created. So here G, 1 USD equal to $80,000. Today is 8/12. Just 1 hour back I created. At the same time, go to the position GB, B currency USD, INR, valid from 08/12/2024. So B also I created. So at the same way, I created 3 currencies in this section. So for these exchange rate currencies, once we created today, next same day we don't have option to edit one more time. At the same time, revaluation, foreign currency revaluation also, once by month ending we will done that revaluation activity. So again, second time we don't have option to reevaluate that foreign currency revaluation, because whatever the documents by month ending we updated before 30 or 31st, but by end of the 31st day, we reevaluate that foreign currency once we run that revaluation. So then again, previous date, nobody cannot post the document. So that once reevaluate is done by month ending, then again, we don't have option to run the second time. Or maybe it will back-end jobs and it will not be worked properly, then we will remove the jobs and schools. Like that one also I will explain coming. Okay, first based on USD only I updated. So this is the exchange rate types and translation ratio and exchange rate. So this is the basic configurations. Once we completed this one, so with the help of these 3 configuration, if it will done, then we have an option to post the document in foreign currency transactions also. So sometimes interviewer is asking us what are the prerequisites to post the document in foreign currency. Then these 3 steps is enough for posting the document. So remaining all required for the foreign currency revaluation purpose. I just explain one document how to post /n FB60. I'm going to post a vendor invoice. Just select one vendor. So invoice date is today date. So amount adjustment, I am going to mention 1,000. So it means $1,000. Here there is option to update USD. So because USD currency, we already updated exchange rates and translation ratio, and today current US dollar price also we updated. So system will update it automatically. So I selected some material, purchase purpose. I selected some raw material. So $1,000. Enter. I mentioned some text something. So this is the document. This is a normal invoice posting, vendor invoice, but there is small changes at the time of document posting. We updated, we changed only USD document only. So then automatically system it calculated. When you are going to check in our INR currency, system will display how much the invoice value in INR currency. So document is posted 1013. So I just check the document currency status /n FB03. It is a document. So this is the latest document 1031. Enter. So you can see we we just posted the document is 1000 USD. So then you want to check the Indian currency. There is an option display currency. Take this one, then automatically it shows 80,000 INR. So it is based on that when we are updating in foreign currency like exchange rate. So here we mentioned is 80. So the previous section I updated in 80 rupees in dollar price. So then automatically system it will take 80 rupees. So if you want tomorrow, if I am going to change 85, then maybe tomorrow I'm going to post any another entry, system it will shows 85,000 rupees. So this is the way at the time of transaction posting, system will take automatically based on the transaction ratio. Or else, if you want to override the document posting time, if you want to change the dollar price based on the some documents or some particular invoices, if you want to post the previous date or previous this dollar price, then you have F.43 vendor invoices. Okay, this is the single skin for the vendor invoice posting. So here, same whatever the requirements, whatever the fields you need to update, and here we will select the currency USD, and here there is an option to enter the price USD dollar price. For example, based on the transaction rate, system will update with the help of OBG rate. System automatically be 80 rupees. But if you want to override, you can enter 75. Then automatically it will show 75 rupees. So till you understand, right? Hello. Till you don't have any doubts, right?
Yes,
Hello.
it's fine. Yeah.
So I'm explaining if is there any like some updates, any mistakes, you immediately please update because nobody can know everything in SAP. If you are going any wrong, immediately please update me. Okay, then FC revaluation. So I already told FC revaluation means by month ending, how much amount will get how much amount will get gain, how much amount will get in loss in the form of the foreign currency fluctuations. So then, if you want to generate these kind of the reports, then we need to do these the basic configuration. So let me one by one explain. So then first one is define accounting principles. So define accounting principle with the help of this path. I'll reach that /n SPRO SAP reference IMG screen. Financial accounting, global settings, ledger, parallel accounting, define accounting principle. Financial accounting new, global settings, ledgers, parallel accounting, define accounting principles. So define accounting principles. So here accounting principles means, so this is the text, this is the text one. So if you want to create the new text or else accounting principles means based on the country wise. For example, one client having a business within one country, so then you don't need to use like accounting principles like US GAAP, IFRS, these kind of the accounting principles you don't need to use. If client having the business in multiple countries, then we need to use these different kind of accounting principles. But anyhow, this is a text. So here, with the help of new entry, I just created this RD. RD means Indian Accounting Principles. So I created this one RD. I just mentioned the small name and Indian Accounting Principles. So this one is I created. So whatever these are different types of accounting principles, but we no need to select all those things. We just created new accounting principle for new accounting. This is the text only. Based on text, we'll assign that leading ledger and non-leading ledger based on the requirement. So first one is define accounting principle also. So accounting principle also created. Accounting principle name is RD. I created Indian Accounting Principles. If you want to create in your server, based on that, you will create in your own names. Next, whatever the accounting principles we created, we need to assign the ledger. So leading ledger is the standard ledger. So leading ledger is the standard ledger, and non-leading ledger means if you client having other country, client having the business in other countries, then reporting purpose we are using the non-leading ledger. Or else client having the business within one country, we are using the leading ledger. So leading is the standard ledger. It will shows automatically in system. So here we need to update that leading ledger to our accounting principles. So go to the new. I already updated. Here once you create the new, if you want to create new one, so RI and leading ledger system, it will shows leading wire ledger. So there are different types of leading ledger based on the countries. But leading ledger is the standard ledger for within one particular company called country level. So in this way, if you want to create new one, so I already assigned our accounting principle RD to assign leading ledger. So this one also completed. Assign leading ledger to our accounting principle. So with the help of same T code, we will assign same thing. And coming to define valuation method. So we can see this one is important. Valuation method. So once again, accounting principle regarding, I'm going to explain. So I'm created this one. So somebody don't have understand. So that purpose I'm creating this one also. Group, what is the difference between leading our group currency and country currency, company currency and company? What is the difference between group currency and company code currency and country currency? I'm going to explain. For example, I'm taking example as a Reliance Group. So please listen. This is the important question, important topic. Many of the interviews also are asking. So in my point of view, Reliance, I'll take example as a Reliance Group. So Reliance Group having businesses in different countries like India, Japan, UK, US, UK, Euro. These are all the countries Reliance Group having the business. So company code. So these are all the company codes. So the RED1 is the company code for India. RED2 is company code for Japan. So like that, RED5 is the company code for Euro. So this is the company codes, and these company codes belongs to these particular companies, countries. So this is the company code currency. For example, REDY companies belongs to India. So this company code currency is INR. Then REDI belongs to Japan. This company code currency belongs to JPY. REDY company code belongs to UK. This company code is GPP. Like that, RED5 company code belongs to Euro. This company code is Euro. Currency is Euro. This is company code currency. So you just understand company code currency means our company, our group of company having multiple company codes. Company code having different locations. So if company code having another country, then we need to create the separate company code. Because as part of our business, company having business in different countries, you must and should create company code, because they need to submit to their government how much where how much goods and services import, how much goods and services export. So these kind of all the information they need to submit the local government. So that purpose they need to create separate company code. So whenever creating the company code, then we need to create the currency in their local currency. Then coming to the group currency. Group currency means Reliance Group having the Reliance Group main branch, like group of company having in India. So then the Reliance Group management, he wants to generate the report. All the he wants to generate the report in group currency only. It means all the company codes level, how much amount will get the profit, how much amount will get the loss. So entire amount. Reliance Group, they wants to generate the report in the form of INR currency. So that purpose we want to create the group currency. For example, we can choose instead of Reliance, we can choose Tesla. So Tesla group, it will be located in Japan. So then that Tesla group of company group currency is so like Japan JPY. So like that group currency is nothing but group of company level reporting purpose, we are using the group currency. Then transaction currency, we just mentioned at the time of transaction post which currency is selected, then that is
Hi,
called
Leila.
transaction currency.
Hi, Leila. Sorry for the interruption. Group currency,
Yes.
nothing but company currency, right? Group currency.
Yes, group company currency,
Yeah, thank
group
you.
of currency.
Yeah, thank you.
Next, so I just
No, I
move
think
some example.
group currency. Sorry,
Tell me.
no, group currency is different from the local currency, right? Group currency is basically for the, as you said, right? Suppose it could be USD. So if one company is running business in the multiple countries, so they want to see the total amount in the USD. So that we can call it as a group currency. So group currency cannot be a
Yes.
local currency.
Yes,
So
I
company,
agree
yeah.
with you.
So it's not a
In
company
my
code currency.
point
Group
of
currency.
view,
Yeah.
my point of view, my client wants to generate the report in INR. INR is my group currency. If client is in US, then INR is group currency is USD.
But group currency cannot be a company code currency. That statement is wrong. That's what I want to
Yeah,
say.
it depends. It depends on your requirement. It depends on your client's requirement. Correct.
Yeah, correct. Yeah, we can say.
Okay, is there any doubts? If I am telling any wrong, you immediately please. So group currency is based on the client requirement. We can fix the group currency. Okay, then I just put an examples. While a report, it will be generated group level based on the exchange rates day by day. Okay, for example, here transaction currency. So company code RIDY or RIDI is one document posted in USD currency. So dollar value is 1,000 rupees. So at the same time, when how we are posted just now. So invoice value is $1,000. So posted in USD. So in the form of, if you want to view as per INR, company code currency, how much that transaction value will generate automatically. The dollar price is 80, then 1,000 into 80 equal to 80,000. So that particular transaction, like a REDI company located in India. So this company code level we posted on transaction. At the time of transaction, document currency, transaction currencies we are using in USD. So the total value is 80,000. So at the same time, REDI company is located in Japan. At the time of under the Japan company code, at the time of transaction posting, we are selected in USD dollar. So USD dollar. So USD dollar price is 149 or something. So 1 USD equal 149 Japanese JPY. So then automatically at Japanese company code currency point of view, if you generate the report, the invoice value is 1,49,000. So at the same time, UK relevant company code REDI, it will posted on transaction in the USD at the time of transaction USD is selected. So 1,000 USD dollars. So basically $1, one USD dollar equal to 0.785 GBP, United Kingdom price. So 1,000 USD dollars equal to 0.78 into 785 785 GBP. So it means under the UK company code level, once transaction posted in USD, it will generated under the company code value. It will show 785. So are you understand my Excel sheet? Based on this Excel sheet, system will once you done the configuration, system will generate the report in group level wise also. Then one more US. So US related company code posted in $1,000. Then automatically here we no need to generate any revaluation because USD company code posted in USD dollar only. So no need to generate the report. At the same time, UK company code REDI located in UK. At the time of transaction posting, we will select USD. So 1,000 USD equal to 785, 0.785. I think maybe I'm updated 2 times. Just remove one thing. So then euro. So euro country level company code. We are going to post a document. $1,000 we posted. So based on dollar price, based on $1 US equal to 0.96 0.96 euro. So then automatically 946. So this is the price. Like each and every country company code level, if you want to generate the report, this report will be generated. So this is the company code level report too. Like Indian company code $1,000 we purchased. So then we need to pay 80,000. At the same time, Japan we need to pay 1,49,000. This is the company code level report too. But with the help of group currency, once we done all the configuration with the help of group currency, system will calculate it. For example, system will calculated all company code level currencies. It will be calculated into INR and it will generate it as a group currency and it will generate a total amount. For example, here I already mentioned this transaction related invoice amount is 80,000. So system already calculated group currency one at the time of ratio also we mentioned 1:1. Then 80,000 total value 80. So 1,40,000. Then here Japanese amount 1,40,000 into as per our currency. So Japanese currency was Indian currency 84,000. So then UK currency was Indian currency. Then US currency was already mentioned same thing. So 80,000. So Euro currency was Indian currency 89. So system will calculate with the help of three different configuration total amount it will be generated. So these are all the transactions. If you want to generate it company code wise, like a country level company code wise, this data it will be enough. Or else client is asking requirement. I want to know how much total amount to purchase by this entire all company code level. How much amount that will be I need to show in as per INR. Then system will be this particular today total purchases is 4,30,219. These kind of report client requirement. If you want to client requirement, we will implement the group currency report. So that is new GL concept. So that is some other separate concepts. But why but middle of the FC revaluation, I'm just explaining the difference between group currency and company code currency. So then define valuation methods. Are you understand, right? Hello.
Yes, Mohan, it's understand.
this Excel sheet you can understand, then automatically you can know the difference between group currency and company code currency.
Yes, it's understand.
Okay, then define valuation area. So this is the third step. Here we need to create one we need to create the define valuation area. So we'll go for the process. Financial accounting, GL accounting, periodic processing. Slash n. Once again. Financial accounting new, GL accounting new, periodic processing. Financial accounting new, GL accounting new, and periodic process. Then go to the basic settings. Okay. Periodic accounting. Periodic process. Evaluate, define valuation methods. This path, everything I'll mention here. You can use that path. Define valuation area. Define valuation area. So here we need to create the valuation area. So click on the new entries. Valuation method. I already created valuation method. So first we need to create the valuation method. So first we need to create the valuation method. So valuation method I already created. So here you can observe this is the important valuation method. So first we need to create the valuation method, and then we need to assign this valuation method to a valuation area. These are the two steps: valuation method and valuation area. Whatever the valuation method we created, that valuation method we need to assign this valuation area. So under this valuation method, so click on the new entries, then I'll created this name. So based on my company code RDV1, RD Reliance Digital Valuation Method 1. So this based on this valuation method, we will create and assign the valuation area. So in this method, we need to update. So click evaluate to. So once so we need to update this one, always evaluate, because always evaluate means some of the clients is asking if uh, foreign currency relevant transaction, if I'll get exchange gain, then only I need to generate the reports. If I'll get the loss, I no need to generate the foreign currency revaluation. So then this time we need to select lowest value principal, these two. So or else, if client is asking if exchange gain or loss, whatever both scenarios, if I want to generate foreign currency revaluation, then we need to select this one. So most of the clients, they are using this always evaluate option only. Then at the time of transaction, like at the time of FC revaluation, system will take which kind of document. So basically, we need to update the SA document, because both debit and credit GLs, both debit and credit line item will enter in GL accounts only. Like that purpose, we need to create the SA document. So FC revaluation, we are using the SA document only. So then I'll update the SA document. Then coming to the exchange rate. So these are all not required. No need to update. So exchange rate determination. So here we need to update exchange rate determination. So like bank selling rate only. Once again, bank selling rate only we need to update here, because whatever the transactions happen like foreign currency revaluation, but we need to like transaction from bank side, we want to purchase transaction from bank side, anything we will select here, like debit balance, credit balance also we need to update here. B, bank buying rate only, sorry, bank selling rate only. So determine each rate for each accounting balance. So these are all not required. If required, then update. So, but these always evaluate is important to update here, and document type essay document is update here. The both exchange rate determination, both will debit and credit balance side, we need to update B. So this is the configuration. I just save it. I already saved. So this valuation method, we whatever we updated this valuation method, this valuation method we need to assign valuation area. Then we need to create one valuation area. Same place.
Mohan, I have one query. See, normally exchange rates types that and all we will assign for month end, right? Whatever you are showing under valuation area.
This valuation area is one time, no need to update month ending.
I am asking whatever the in valuation area level, whatever the exchange rate type you are mentioning, like YRM, whatever it is, that one only it will be considered for revaluation, month end revaluation.
Yes. No need to update month wise or quarterly. Once you fix that one, that is enough for one physical year. Later, if you want to change, we will create.
Okay.
So that so then this valuation method we need to assign the valuation area. Then define valuation area. So here go to the new entry. So here valuation area name we want to create new one, and whatever the valuation area whatever the valuation method we created, that one here we need to update. So this is a new entry. I already updated this one. So I'm gonna exit. Okay, this is the valuation. RD is I just created as per my requirement. RD is the valuation area. So at the time of valuation area, like valuation under this valuation area valuation area path, we will create valuation area, and whatever the valuation method we created, we need to assign this valuation method. Okay. And here we need to select the company code currency. So whatever I'm explaining the Excel, this Excel, it will be useful for this transaction. For example, as per client requirement, client wants, I need to generate the report only company code currency wise. Then we'll select company code currency. Some of the clients, I need to generate the report in group currency wise, because they are having company codes in multiple countries. Then they want to generate in group level report. Then first we need to create one valuation method and select the valuation area and create valuation method and assign currency type. Then if client wants one more group currency, then again we will create a new thing. Go to the new entries like RD valuation method. RDV1. Here we need to select group currency 30. So then we will select and save it. But in my point of view, because if you generate the reports from group currency also, then we need to do some currency settings. There is some another topics. If we will select the currency settings and like other configuration, then only system it will generate the report. So in my point of view, I no need to update group currency report.
Okay. But here that valuation column is primary key, no? So you have to create new valuation as well, no?
Sorry.
Valuation column, you have mentioned RD, correct?
This is primary key. We have option to
So you
create
have to
here.
create new valuation for new valuation. If you want to select currency type, as in you need to generate reports in two currency types. So you have to create new valuation as well, no?
Yes.
Because the same valuation you won't be able to assign it.
Yes. Sorry. We need to, for example, RD or else RX something. We need to create and assign valuation method and select group currency. So this is first accounting principle creation, and we need to assign the account principle to leading ledger, then create define valuation method and define valuation area. Here we need to assign the valuation methods and assign valuation area to account principle. So this is the key, major key. Based on that, so assign valuation area to accounting principles. Assigning valuation area to account principal, same path. We're going to click on that. So before that, we need to check check assignment accounting principal to ledger groups. Once again. This is in my point of view, I'm using only within country. So I'm using the leading ledgers. So so whatever accounting, whatever the defined valuation area we created, that valuation area we need to assign the our accounting leading ledger group. Here, my point of view, I am using only leading ledger. So then RD, this valuation area we need to assign that leading ledger. Before that, if it is assigned or not, once we'll check. If it is assigned, then we can leave it. But assignment is required. Then these are all the 3 steps completed. We go to the assign valuation area to accounting principle. So click on this one. So here, assign valuation area to accounting principle. So whatever the valuation area we created, this valuation area we need to assign this accounting principle. So this one we already created accounting principle is RD, Indian accounting principle. So this accounting principle we need to assign this valuation area. Like our valuation area is RD. Then I created accounting principle also RD. So this is example purpose. I created same thing. So actual procedure, whatever valuation area we created, that valuation area, we need to assign the accounting principles. So here Indian accounting principle name I just mentioned in RD. So save it. I already save it. So this is 4 steps under the valuation. So first we need to accounting principle, assign accounting principle to leading ledger and define valuation methods, define valuation area, assigning a valuation area to accounting principles. So these are all the these are all the important steps. So this one not required, just remove it. Okay, this one checking purpose if leading ledger is assigned or not. Then here this is the most important. Based on this configuration only, whenever we are post the FC revaluation, system will pick automatically for the relevant GL accounts. So this is the most important. So if we want to generate the FC revaluation, we need some required GL accounts. So like I already explained how the transactions is going on. If we are taking the loan from bank, then cash or bank account data to FC loan account. Then we need, once again, then we need to create FC loan account. At the same time, FC revaluation time account balances. If you are getting exchange loss or gain, then we need to create exchange loss GL account and exchange gain GL account. At the same time, as open item point of view, if you want to run FC revaluation, how the entries is going on means if you'll get the loss, exchange loss account data, exchange loss account debit, and balance sheet adjustment account credit. So then we need to update we need to create balance adjustment account, balance sheet adjustment account, GL account also we need to create. So then FC revaluation, FC loan account GL account requirement, and exchange loss GL account requirement, and exchange gain 3, and exchange loss. I think of 4 GL accounts we need to create. So how we are going to create this 4 GL accounts? So required GL accounts. If you want to run the FC revaluation, these GL account we must and should we need to create. Then only we'll run the FC revaluation. So first one, FC term loan account. Like I'm taking the loan from foreign bank, then I need to create the FC term loan. So basically, term loans, whatever we are taking the loans from banking and financial institution, financial sectors. So this comes under the secured loans, because if you are taking the loan from any other third party or persons or friends something, so this is we could not treat it as a secured loan. So because whenever we are taking the loan from banks, compulsory 100% we need to repay that amount. So before taking that loan, bankers will take some other security related documents. That purpose, whenever we are taking a loan from any banks, that is comes under the secured loans. It comes under the balance sheet liability side. So we need to create the secured loans. I already created one secured loan GL account /NFS00. So secured loans under the current liabilities, loans and advance. Once again, this is my company code or not. Secured loan. So secured loans. So here I already created FC term loan account. Just identification purpose mentioned in USD. So this is the GL we need to create. I already created, but explaining. So whenever we are trying to create a bank loan, whenever trying to create a bank loan GL account, so this comes under the secured loans. Go to the type and description. We are selected as a secured loans. So all the secured loans and live secured loans comes under the balance sheet. So then I created as a text FC loan or loan account USD. Then again control data. So here whenever we are taking the loan from bank, here I mentioned is USD. So if I mentioned in USD, why this is account currency? This is also one of the interview question. What is difference between account currency? Means if whenever we are trying to create the GL account, try to create a GL account, at the time of GL creation, if you mention as a USD. So for example, I am taking the loan from USD, so that I mention in USD. Once at the time of GL creation, I mentioned in USD. So later I'm going to post the transaction with the help of this GL account. I have an option. I have an option to post only USD currency only, like a USD dollar on USD currency only. I have an option to post to. I have an option to generate the transaction. So or else at the time of GL creation, if I mention is INR is the company code. If I mention is INR, so you have an option to multiple country currencies at the time of transaction posting. For example, previously we posted one document. At the time of transaction, I mentioned in USD. If here I updated this particular GL INR, then automatically I just mentioned in one more transaction. Here I mentioned in USD only. So this term loan /NFB60. So this is the vendor invoice. I am trying to post one more invoice, just example purpose. Here USD. If I am post USD, select USD system, it will take system. It will take go. So date and everything I mentioned. So once at the time of GL creation, I mentioned in USD. At the time of transaction posting, system will take only USD transactions only. Or else at the time of GL creation, I mentioned in company code currency, system will support all country currencies. So here I updated only USD. So I'm trying to post one more document in another country currency. System it will not update it because it shows error. So here, sorry. So I'm taking one more another country currency. System it will not take it. Okay, this whenever we are trying to create a GL account, once we updated USD, then system will post only USD currency only. once you updated company code currency, then system will post different country currencies also. That this is the use for this one account currency. Then go to the create bank interest. So here we are getting the bank relevant GL account. So that I'm creating the field status group as a G005. It is relevant for the bank accounts. Enter, save. So there is no changes. So okay. This is the GL account FC term loan created. I already created based on the GL group under the secured loan. So this number range I already updated in the chart of accounts. GL group's number range. So then cash or bank account. So I bank account. So I have already created another bank account. So banks accounts comes under the current assets. So I have created main bank access access account. So no need to create a bank account. So I already created bank account. Then exchange gain. So exchange gain comes under the other income. For example, I already told as a part of vendor payment, at the time of payment, dollar value it will be decreased compared to purchase time. Then we will get the exchange gain. So these kind of exchange GL, it will be updated automatically at the time of FC revaluation run. Because before that we need to create this exchange. Before that we need to create the exchange gain GL account. So these all GL accounts we need to assign. These all GL accounts we need to assign for automatic. This is the final step. So exchange gain. So it is comes under the other income. So whatever this is unaccepted income, whatever these kind of all the incomes we treated as a other income. So go to the other income GL accounts. I already created, but I'm showing that how I created other income GL account. So exchange gain account. Click on this one. Go to the edit option. So type description. So other income GL account. So this other income exchange gain GL account comes under the other income GL account. And coming to the short text also, I mentioned the name. Go to the control data. Here same INR. So short key. Why I mentioned here? So here I need to mention the vendor number. So this is vendor relevant transaction purpose. System will pick automatic because here updating exchange gain only based on the line item. Based on the open item, system will generate the report. How it will generate the report? I mean, at the time of generate report, based on this vendor number. Based on vendor number, system will generate the report. System will generate the reports. Later, I will explain. So then go to the create bank interest. Here I will select once again.
Sorry, in control data. There is an option, right? Balance in local currency. Okay. For example, if account currency I mentioned USD. Okay, and also I have ticked this only balance in local currency. Then how it will affect in system? See, it means that if you are performing the transaction USD only, but I have ticked this only in balance in local currency.
Okay, I'll try it. Once I select the local balances. So if you select the local balances only, this particular. So it means at the time of reporting purpose only. If you want to better report, we will select this like within group, within country, company code currency only. You want to generate this one, then we will select the local balances in local currency only.
Yeah, this is fine. My question is, for example, in loan account, you mentioned in control data as a account currency USD, and also you take this only balance in local currency. At that time, how the system will perform? Like whether if you at the invoice level or a transaction level, if you are using like INR also it will allow, or how it is?
Based on the valuation area, if you assigned the company code currency, then the system it will take company code currency level only. It will generate the report.
As per my idea, once you select that only balance in local currency, that is only accepted in local currency, not accepted other currencies. That one selected or not. Once you select that currency checkbox, that one is accepted only local currency, not
Yeah,
accepted other currencies.
yeah, that is fine. Yeah, what you mentioned, that is fine.
Exchange
Okay.
loss currency.
Yeah, but in loan account, for example, we have taken loan from other country, maybe USD. At that time, you are mentioning the loan in USD currency. Okay, and same way you are taking the balances in local currency as well. Tick mark, master data level. Then how the system will perform while you are making a entry.
Once we posted the entry as USD, then it will automatically convert it as a INR, like a company code currency. Based on that, it will generate the report.
Okay, fine, got it.
That is the transactions currencies. That is the main purpose of the foreign currency.
Yeah, got it, ma'am. Thank you.
Yes, thank you. Thank you.
So then exchange gain account will created.
Acha, can the exchange gain and loss account be same?
Once again,
Exchange gain GL account and exchange loss.
so exchange loss comes under the based on the direct
No,
expenditure
that
or
GL account
administration.
can be same. As in 100450 can be exchange gain account and 100450 can be exchange loss account. Is it possible?
No, that is separate. Exchange gain comes under the other income. Exchange loss comes under the administration or any other. We can select that one. So in my point of view, exchange loss I'll treat it as administration cost and group under the administration cost group. So exchange loss account. Okay.
Okay.
So here exchange gain is 100901. Exchange loss is 101402. So it is comes under the administration GL group. So here also I just created administration group. Under the administration group, I created exchange loss and gain, control data. So here also I did not selected only INR currency. So if you want to generate the report in INR only, then automatically I'll update it here. Like exchange loss report, if you want to generate in INR, then I'll select it here. If you want to generate the report exchange loss or something in group currency or company code currency, so whatever based on that, we will select that here based on that valuation areas. It will be updated. So remaining all it will be same. Once again. So system is working slow. Once again. Okay, and another GL is exchange gain and loss created. Then coming to balance sheet adjustment account. So this balance sheet adjustment comes under the current liabilities and provision. Under the current liabilities GL group, we are going to create the balance sheet adjustment account. Because why we are going to create the balance sheet adjustment means if you are using the unrealized gain transaction, then it will this GL account it will be required. Here you can see unrealized entry purpose. If you want to generate the FC revaluation, then you need balance sheet adjustment account. So then I'll create the balance sheet adjustment account, current liabilities and provisions. So first of all, balance sheet adjustment account edit. So current liabilities and provisions under the group I created balance sheet adjustment account. Sorry, here also need to change control data. Here also I mentioned a short key as a vendor number, create bank number. So everything it will be same. So these all the like these 4 GL created, bank GLs I already created. So this is the required GL accounts. Then here final step is I think automatic postings for revaluation. So how when we are going to run the FC revaluation, required GL based on the transaction, required GLs it will be picked automatically because these kind of all the GL accounts we need to assign the account balances transaction key and open item balances transaction key. So there is a T code OBA1. The help of OB path I did not update here. The T code is OBA1. With the help of OBA1 T code, we need to assign all required GL accounts. We need to assign these reconciliation numbers. So go to the OBA1 /n OBA1 /n OBA1. So here you can see there is different types of configuration accounting maintaining for automatic posting procedure. There is different types of keys is there, but as per our requirement, like exchange rate different using the exchange rate key. So KDB it is help for the accounting balance, like what we created a loan from foreign banks. So that account balance revaluation purpose we are using this KDB. And exchange rates difference open item GL accounts, open item or GL account, like customer or vendor or any other open item GL account purpose, we are using this KDF. So now I'm going to double click on this KDB. Here I'll update. Then automatically system will ask our chart of accounts. My company chart of accounts is RDOC. Continue. So here, this is the main interlink between main updation. So this is account balance revaluation. So here we need to update exchange rate. So here I'm using only USD. So then I'm updating USD. If I want to use another company codes, another country currencies, then I need to update GBP something. So in my point of view, I am updating only USD, so that I'm mentioning this is a text name. I'm updating USD name. And here expenses account, gain account. So expenses means loss account. So exchange foreign currency exchange loss account, whatever the GL account we have created, that account we need to assign here. And gain account, whatever the foreign currency revaluation time, if you'll get a benefit, then we need to GL account, we need to we need to update exchange gain account. So that two GL accounts we updated here. Exchange gain 100909, exchange gain 100909. Gain means profit, expenses means loss. So if you get a loss from FC revaluation, then this loss number will need to be assigned here. So loss number is 101402, 101402. So this is FC account balance revaluation time. We need to update these two GL accounts only. That is enough, and save it. I already updated. Just go back. So
Mohan, can I ask?
Yes, please.
You're not required for not determined for any loan from bank, right? Not required.
No need to particular. So that is how system will update. So particular like here we updated this the help of KDB. We updated expenditure and gains only. But your doubt is correct. How it will be reflected to the particular FC loan relevant transaction, how it will be generated, right?
Yes.
So at the time of I think once again that GL master data, we need to assign this KDB. Based on that only system will update it. So once I'll go /n FB
I think in S4 HANA, both open item and non-open items will be configured in KDF only now, Mohan.
Sorry, I don't know in S4 HANA.
Yeah. I think, I have worked recently. Okay. Both open item and non-open item, we are not differentiating with like KDB and KDF. Both are KDF itself.
Okay, right.
Only in for HANA, KDF is work on that, right?
Yes, only KDF.
Okay.
So exchange rate. Here I need to assign that whatever we're going to create a transaction KDB. Sorry, here exchange rate USD, whatever we create the USD. This exchange rate we need to assign here exchange rate difference key, so USD. So based on that, whenever making a transaction, system will update. So this one we need to update here.
Okay. And one more doubt. And here in FS00 under the in FS00, yeah, here FC terminal is not picking off the reconciliation account. This is not a subledger account. No?
Yeah,
This one,
open item.
at
Okay.
the open item point of view, will update reconciliation account also.
Okay.
So whenever I'm going to upload this, so this is GL account balances, and again I'm going to update the open item balances.
Okay.
So with the help of KDF, so here only we'll assign the reconciliation balance account also.
Okay. Okay.
So here go to the new entry. So under the KDF, this is open item management. So here open item management means, so for example, you can as vendor point of view, so we have a different kind of reconciliation account like domestic, international, one-time service contract. Based on the reconciliation account, if you have a 10 reconciliation account, like 5 is for customer reconciliation account, 5 is vendor reconciliation account, then we need to assign each and every reconciliation account same process. So here I'm just updating vendor reconciliation account. I have one vendor reconciliation account that is domestic. So that vendor reconciliation account is 100501. So go to the reconciliation account. Vendor reconciliation account comes under current liabilities. Vendor reconciliation account 100501. So this number, open item balance, open item management, open item side, we need to update here. 100501, 100501. So these and all not required. So loss at the same time, how we assigned at balance sheet, how we, at the same time how we assigned previously. So here also we need to assign loss account. So loss account means loss account 101402. Sorry, 1014 already mentioned it. So at the same time gain account means 100909, 100909. So this is exchange rate difference realized. So realized means we need to update realized and unrealized also we need to update here. Realized means after transaction payment done from vendor, payment received done from a customer. After that only, I mean payment transaction completed. After that only, we need to generate the revaluation. So how much amount will get will loss, how much amount will get profit. So that purpose, this field like exchange rate difference realized. So here we need to update 1014 exchange loss and gain. Coming to here, this is these three fields you need to update unrealized gains. So unrealized means this from only uh, reporting purpose. So then I already updated unrealized means. So when you are going to generate the unrealized transaction, if you get the loss, exchange loss account data, balance sheet adjustment account debit to, balance sheet adjustment account credit to. So once by month FC revaluation done, then again next month first tarif we will reverse that one. How we will reverse that accrual and deferral concept at the same time. FC revaluation also we will reverse that one. By month ending only reporting purpose we generate this one. And next month first automatically will reverse that one. So at the time once reversed, again the entry it will be reversed like balance sheet adjustment account here debit, and once reversed that balance sheet adjustment account comes under the debit too. So the both balance it will be nullified. So here we need to assign same. Last means 101402. Whatever here updating, same thing you need to update 100909. And coming to balance sheet adjustment account, how we created balance sheet adjustment account number is 100503. So this number we need to assign here 0503. So this translation ratio, I don't have proper idea. So this both is enough for the open item management revaluation checking purpose. So then save it. I think I'll already save. So just explain purpose I am updating it. So 100501. So this is custom vendor reconciliation account, and this is 1007703 customer reconciliation account. So at the same time, how we can assign all those things? Here also we need to assign all those things. So this is main configuration. So based on this configuration only. So if you want customer, for example, customer entry, customer account data to sales account. So how we can create the sales GL? The time sales GL also we need to assign. This one, what we created, USD something. So are you understand till there any doubts?
Yes, it understand.
I'll try my best, whatever I have knowledge. And so then final once entries is like invoice entries is done, like a vendor invoice, vendor purchase entries have posted. So again, if you want to generate the FC revaluation by this month ending, for example, for this month first tarikh, we posted one entry worth of $1,000. Value is 80 and total value is 85,000. So by month end, if you want to generate the reports, or by month end, if you want to generate the FC revaluation, again, the end user or courier, whoever updating the foreign currency value, foreign currency rates daily, that person, he need to update 31 date, this month 31st also he need to update same exchange rate values, total value. So that person by month ending 31st, you need to update exchange value is 85. Then automatically whenever generating the report as a FC revaluation, it will shows 85. So difference also 5,000, it will be generated. So this is the result. If you want to generate the result. So I already updated. So by month ending, so same thing, FB0, sorry. OB08 T code, again we need to update exchange rate by this month ending date, OB08. So G currency USD INR. So I already updated, just I'm telling you value from 31st 12 2024. So when you want to run the FC revaluation at the month ending date, compulsory that foreign currency exchange rate also need to update it by month ending date. Then only will run the FC revaluation. So I already updated by month ending date 31st 12 on USD equal to 90,000. So I already updated. So based on that system, it will be generate the reports. So it will show some error. FC revaluation run T code FAGL. I already run. First time it will show the result, like how much amount it will be invoice date, purchasing date, and say foreign currency exchange rates and month ending date. Everything it will be display. But again, once it will generated, FC revaluation process I generated, but it will shows error. So somebody help you this time. Somebody help me this time. I'm going to do that process because I am stuck here. So this is the foreign currency revaluation T code. So this is the parameters we are going to run. Before that. So company code REDI. And if you want to run the revaluation by this month end, so I need to update by this month ending date. Because entries is posting like today 8th date, but I am going to run FC revaluation by month ending date 31st 12, and also it is future date. So before going to update, we need to enter company code and valuation day, valuation key date, and here valuation area. This is the more main configuration. this is based on this valuation area only. FC revaluation it will be run, because under the valuation area we will assign all the configuration. So valuation area will assign accounting principal, account and leading ledger and valuation methods, and assigning valuation area to all the configuration will comes under the valuation area. So once we'll assign the valuation area at the time of revaluation, like my valuation area is RD something. So then, so these are all the prerequisites before by end user before going to run the FC revaluation. Then if you click on the create posting, then original posting is done, happen. So I'm going to update for executive display purpose. So here document date. So document date means which date we are going to do the FC revaluation. So that 30. So today like by this month ending 31/01/2024. Posting date 31/01. So when I'm updating these details, the result it will not be updating properly. So somebody help me, some issues it will be generated. I'm not able to trace that one. Posting period not required. So reversal data. So this month, by month ending, we are going to generate FC revaluation by reporting purpose. So again, next month, which date we are going to reverse that one. So I will update next month, first date only. So 01/01/2025. So this is the basic parameters. If end user want to run the FC revaluation, then coming to this open item. So here open item like GL related open items and vendor related open items, customer related open items. So if you want to generate the report all the vendors, then you will select like A to A or Z to Z something, or else if particular vendor wise, I will select vendor details. So here, sorry, here I'll select the vendor open items. So I'm going to select something, one vendor. So which vendor I already posted 1000308. Here also 1000378. So if you want to generate the revaluation at a single time, all open items like vendor items, customer items, and GL balances like account balances, we need to update all those things. Then I'm going to customer. So previously I updated some customer invoice also. So that I'm selecting customer 546, 546, and GL balances like how we are taking the loan. So that I'm taking the FC revaluation loan account. 00303 FC term loan account. And here also same thing 10030. So this is the parameters. If you end user before going to run the FC revaluation by month ending, first we need to go to the postings. We need to end user need to update these requirements and go to the open item. So these are all the parameters. Once it all done, I think execute, the system will show okay, it will show correctly. Previously it will not display properly. So you can see K means like customer document. I did not post any document, so it will not display. So K means vendor relevanted. This is the vendor name. This is the 30 GL. So this is the GL account, and I think this is the vendor name. Okay, this is the GL account, vendor name, document number, item. So amount currency I posted in USD 5,000 USD equal to based on the price of 4,15,000. 1,000 USD equal to based on 80 rupees, so 80,000. So 2,000 equal to $2,000 into 80 rupees. $2,000 equal to 80 equal to 1,60,000. So this is document time or whatever the USD currency, and it will change as a INR currency. So coming to exchange rate. So exchange rate, it will be in 95. So 95 rupees as a 35 by month 31st date. I'll update it as a exchange rate as a 95 rupees. So then automatically 5,000 into $95, $5,000 into 95 Indian rupees equal to $1 equal to 95 at the same time. $5,000 into 95 equal to 8,30,000 something. Sorry, 83,000. So here only 1,000. So you can understand in this way reporting it will be generated. So maybe AR document like 7,35,000 once again. So are you understand in this way reporting it will be generated like what is the valuation difference rate, account posted date.
Yeah, there is a 2 error messages. Can you click that error messages? What is that? 2 messages above. Yeah, click that.
Yes. That's what previously reporting it will not be generated. So this error I need to resolve. Can I click this one?
No, below one we need to resolve. Below we can see account determination, right? So if you observe this account, double click this, we can see these accounts need to be created, and also it should be assigned in OBA1 record.
So account determination 100,501.
Yeah.
Yes, we already created and assigned.
And here FS00 that other income, sorry, exchange rate loss and gain accounts we have created in FS00 on time creating to the post automatically checkbox.
Once again, I'll check.
See that one selected or not. This is determine GLs in other expenses and other.
This one, right?
Other expenses and other income. Yes, accumulated depreciation on that time. We created one GL. That one is relevant to the.
No, this one we already.
No, accumulated depreciation. Explore that one.
Please go on.
No, what I can say.
That is not depreciation. That is unrealized loss.
No, depreciation is not relevant here.
No.
Sorry, please close this one. Close this one and that one administration cost and another.
Okay, this one exchange loss.
Yeah, that is selected. Need to select that post automatically. Okay, create and interest. Create and interest. Yeah. Selected that post automatically checkbox and save it. Yes, another one. That one is other income. This is realized again. This one also selected. Need to select that checkbox.
Okay.
And one more thing that yeah.
Same errors it will be displaying.
Account determination for
come back and run one. You will see whether same error or not. Can you come back the same screen and
101402. This one something.
In KDF level also we have to determine that GLs in valuation level. OBA1.
1001042. That GL missing. So the GL comes into which GL I'll check.
Okay.
Can you check at table level? Better.
You can search the GL number by search and check here. It will come the GL number.
Can I go to?
Yes, KB1 you can see.
10002.
100
502.
It's 402.
501. 501.
402.
100. This one, right? 501.
Yes.
You see, both you see, no problem.
Both.
100501 00402.
Should not give like that. Multiple, go to multiple selection and give. Remove this. Two value remove and down you put. No, just remove two value and press enter and down you give that value. Enter. 0.
Okay.
Now you give one value, press enter, and then you will give next two value.
00408.
Enter. Enter. Just enter.
Sorry.
Yeah. No, down you need to give actually, not beside.
Enter.
You enter. Just enter it. This is not showing down. Or else close this. Close this and because you mentioned earlier, na, that's why it's not showing. Just remove two value. Remove two value. Remove two value. Now we go for multiple selection. Yeah, now we enter it. No, down, not down. You give, please.
Here only.
Yeah.
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 Okay.
Execute.
Execute that one.
Beside. Yeah. Execute now. What is the company code?
REDA, first one.
See, if you observe, you can see only one GL. Okay, second GL is not exist. So second GL you need to create. Second GL is not exist at company code level, which is 402 something, 102 something is there, na? 1040 something, that GL. This GL 100402 is not exist at company code level.
So why the GL is asking?
Maybe it may be a balance sheet adjustment. What I can suggest you, just check this GL at chart of account level. Maybe then we can find it. What is the GL?
No.
SK1 level. SC16 level, you can see SK1.
OBD for can I check?
Table level, you can see SK1.
Oh, okay. One second. My system is slow. SK?
A1.
SKA1. Okay.
Yeah, enter and put only that GL. And you put company, yeah. Put the GL. Execute.
I just enter company.
Chart of account. And GL. No GL. No, GL is not like this. Then what is the why it is asking?
My balance sheet adjustment GL account is this one, 100503.
Okay, can you go to parameters once in Forex Revaluation? Turn all parameters you are selecting. See, I have one doubt here. Okay, you are performing forex revaluation for the date of December 2024. Then documented and posting date, why you mentioned like January 2024?
Reversal date means
document date.
sorry. This one also 31st 12 I need to update.
Yes, correct. And what I can suggest you, okay, you are performing for this month, right? Okay, fine, you put this month date only. Yeah.
Okay.
This is one thing, and go to open items, click on open items. Okay, don't select anything. Rather than mentioning these individual GLs, put all. Don't select none. Okay, this is fine.
This one vendor and customer.
Yeah, this is fine. Yeah, this is fine.
So this one also I need to update, right? Evaluate GL.
Yeah. Okay, this is fine now. Now you execute once, you'll see. You're performing in test run or else which run?
Once again.
You're posting on test run or else
Test run only. Test run only this one.
Okay. Now you click on messages once. Okay. You take this GL 100501, go to the table T030H.
T0
30H.
T030H, right?
Yes, correct. Enter.
Here I need to enter.
Chart of account and GL account you put. Chart of account and GL account you put that.
Like this one.
Yeah, 100501. Only that one we put. 100501. Execute. No, why it is coming all this? Only chart of account, one chart of account it's right? Just give only one chart of account and GL account.
DOC is my chart of accounts.
And give the GL. Execute.
Okay.
Yeah, now if you see 100402 is last account. Okay. That GL is not created at chart of account level as well as company code level. That's why you are facing this issue.
I'm sorry, I'll go to the FS table.
Can you come to the back screen once? Here you can observe, Mohan. Here you have mentioned 101402. Here by mistakenly you have mentioned 100402. For gain it's same. For loss it's different mention.
Yeah, that is the.
Yes, that is the mistake you have done there.
101402.
Here you have mentioned 101402 only correctly, but by mistakenly you have entered here 100402.
In OBA1 configuration, you mentioned wrong GL over there. Okay, that is the reason you are facing it. See, the 402 is not there. Valuation loss.
Yes, valuation loss 100402 you have mentioned here. It's not 100402. 101402.
One 101402, but I mentioned 101. Correct.
In valuation, sorry, in next screen, 100402 you have mentioned wrong here. Here.
Okay.
Yes.
Okay.
There 101402 you need to mention. Done. It's okay.
Okay, then I'm going to run.
Now you run, it will not get any error now. Okay.
One message is allowed.
This is fine. This is yellow. That is not error actually. Okay. That is already posted. There is no error message. Yeah.
So then back and create posting, right?
Yes.
Okay. So from here onwards, I don't have like I did not get a good idea like school's request and everything. So can I execute?
Yeah. Yes.
Okay.
Yeah. See, now it is posted.
Document 22 was posted in company code.
Yeah.
Okay. Then how it checks like SM34/NS?
Sorry. Yes. No. You are not run battery. No. You are directly executed.
Okay. Directly executed. If
Yeah,
I'm going to run background, then it will display, right?
Correct. Okay.
And before going to tell me, please.
Can you show the document which was posted now? Document 22, I think.
So I want you to not be.
No. Because you posted in USD, right? You have to see at local currency level. So display a currency in different. So okay. See now, and this is the transaction we posted.
Total exchange loss account 1,20,000, balance sheet adjustment account 1,20,000.
Yeah.
So again, we'll reverse that one next month. It will nullify, right?
Normally, it has to get reversed automatically.
Yeah, actually, it will be reversed automatically.
Yeah.
Okay. Thank you, everyone. Thank you for support and also spending more time.
Thank you so much, Mohan. You have given valuable information. Seriously, it's good actually.
How it can be automatically reversed in the next month? I don't know how it is happen in the system.
No, yeah.
No, it is because of the configuration. It will reverse the next day.
See, there is an option. Okay, Mohan, if you don't mind, can you go to FAGL_FCV? That it means that forex run T code. There is an option to we need to tick that reverse. Okay, so automatically it will get triggered.
One second. FAGL
FCB_val PAL.
FAG_FC_BL.
VAL.
VAL.
Yeah.
Enter.
Yeah, here if you see
reverse date mentioned it here.
No, down if you see reverse postings, okay, we need to select that reverse postings normally. Down
when we are executing at the same time, we have to put the date.
Yes,
once
correct.
you click on the reverse, based on that date, it will reverse automatically, right?
Correct.
Yes. When you are given to that reversal posting date, this one also automatically that entry is reversal in post. Automatically that next month.
Next month first, right?
Yes. Yes.
Correct.
Okay, thank you so much, everyone. So this Excel sheet also I am I'm shared in chat box. If anybody wants to practice with the help of Excel sheet, please do it.
When video will be available? It will be
Video also available. So once